Okay, welcome back. I'm here once again with John Nagy from Reedhurst Nagy, fairly decent-sized accounting firm located in Richmond. John, welcome back.
Thanks, Mark. It's great to be here again. Good to see you.
Good to see you.
Happy holidays.
Yeah, I hope everything is going well and you've survived until now.
We're doing well, just managing to keep up with the work and keep our clients informed about all of the different programs that are available.
Excellent. So the reason I wanted to get you on, we had you on a little earlier in the year when they first released a lot of programs. And one of them, most specifically the CEBA, I think it's the Canadian Emergency Business Account, had a slight modification as of, I think, a week ago. So I thought maybe you can just touch on a few things about that and explain exactly what's changed.
Sure. So the CEBA, as it was originally done, was a $40,000 loan that if you repaid it by December of 2022, you got to keep $10,000 of it as a grant. It was rolled out in April. It had some, just like all the other programs, it was done very quickly. So some of the rules around it didn't make sense for the average small business that needed the money. And it's been modified a couple of times since then. The most recent changes were that it was increased by $20,000 to make it a $60,000 loan. And it now, when you do the math, is 1/3 non-repayable if you repay the whole thing, or if you pay the other 2/3 by the end of December 2022. So the $40,000 was 25%. The additional $20,000 loan is forgivable at 50%. And if you get them both together now at $60,000, it's 1/3 forgivable.
So basically, you're paying back 40 if you take the 60 now. Are the dates the same, whether you applied for the one earlier and this one, the payback date's the same, or did they extend it on the
payback? No, the payback date is still the end of December 2022. But they have extended the application date to March of next year, March 31st next year. So that has allowed for more applications to be submitted.
So basically, business owners and the like have about 3 months left to take advantage either of the whole thing or the top up of the 20,000.
Right. So the way the program has been designed, if you already have the 40 and you were advanced the 40, then it is a top up of $20,000. If, however, you haven't applied in the past and are now applying under the new program, it will be the full $60,000 that you're applying for, and it will all be built under the new model. Absolutely.
So obviously, you know, like all their programs, they're kind of changing on the fly. But as you see it right now, what are the basic application qualifications for this or criteria?
So essentially what the basic rules are, you have to have had a payroll account or have a payroll account or a business number. Actually, it's more of a business number than a payroll account. And the previous program required that you actually have payroll of over $50,000 in 2019. They've since modified that. That was one of the changes, and reduced that to $20,000 payroll in 2019, up to a maximum of $1.5 million of payroll. So if you have employees and you paid more than $20,000 in payroll last year, then you're eligible for the $60,000 CEBA. If you don't have employees and you're not paying yourself a wage, then there's another stream that they're using. They're calling it the non-deferrable expense stream. And basically what that means is if you have expenses that in total are more than $40,000 up to $150,000 that you can't get out of, things like rent, property taxes, insurance, mortgage payments, etc., then you'll be entitled to apply under that non-deferrable expense stream. Right. So essentially you've got two options. Either you have payroll of more than $20,000, in which case, and that was in 2019. In that case, you're eligible, or if you have the non-deferrable expenses this year.
So let me ask you one question, and I'm not sure, maybe the answer is not out there yet. So say small business owner, you say pay yourself. So say I've been in business for 3 years, I've got shareholders loans, so last year I took a dividend, say of 30,000. Does that 30,000 that I'm paying to myself qualify under the 40,000 that you know of, or not sure yet?
It does not, because it's not a non-deferrable expense, and it's not payroll. So unfortunately, you would need to apply under the alternative stream, which is the non-deferrable expense stream.
So basically $40,000 of non-deferrable expenses.
Right.
Got it.
And the concept, if you think about it, is if you don't have any expenses, what do you need the loan for other than to pay yourself? And that's not the point of that in that scenario.
Well, and I think
there are other programs that you could apply under.
And I think this brings up a good point. Like, not all debt is good debt. I mean, if you're, say, a business that has suffered severely under this, taking this loan isn't going to make your customer come back and buy more. So it may give you the ability to, to keep to stay afloat. Let's put it that way. But I don't know that it's the answer.
Well, the other thing, of course, is you have to understand that if you don't pay the balance that is not forgivable back by December of 2022, then you don't get any part forgiven and you owe the entire $60,000. And now the bank's going to start charging interest on that. So you're now in debt another $60,000. Exactly as you said, it may not necessarily be good debt. This is designed to get people over the hump until the economy recovers and they're able to start making those non-deferrable expense payments themselves. But they also have to be able to accumulate an additional 2/3 of $40,000. Is that right? Yeah.
Yeah, within that year period. So you've got to be able to come up with that cash to pay off the forgivable amount, the full amount less the forgivable amount.
Right.
In that
exactly.
2 year period. So if you took the 60 grand, you've got to be able to count 40 grand cash in 2 years.
Right. Now, I don't imagine there's any, there's no restriction on you going and borrowing that money on an ordinary loan from the bank and paying back that. I'm sure that's acceptable. I haven't seen any restrictions on that, but you're still going to be on the hook for the 40. And if you can't pay back the 40, then you might have trouble getting a loan for it. So
right.
I think you need to think carefully before.
But I think a lot of businesses probably had that philosophy right out of the gate. Well, listen, I'll take the 40 because worst case scenario, 2 years from now, I'll go get a loan for 30.
Yeah, exactly.
Yeah. Exactly. Anyway, if anybody has any questions about this, best way to get hold of you
is jnagy@rhncpa.com or 604-273-9338.
Excellent, John. I'll put those links and numbers on the video. But once again, thanks for taking the time and really appreciate the information.
Great. Thanks, Mark, and have a great holiday.
You as well.
Okay. Bye-bye.